If you've ever had a Binance US account, stay tuned because I'm going to show you what may be the easiest money trade that you can make in crypto right now. Smart money have been exploiting this for the past 24 hours, locking in an instantaneous 10 to 12% profit. And we're going to cover a whole lot on today's show. If you look at the Banter Bubbles chart over here, you can see that the market, of course, is pulling back, mostly red over here. We've been consolidating within a tight range for what feels like forever. It's at least 2 weeks, but there is some important indicators which are suggesting that we may be leaving this range sooner than what you might expect. So stay tuned until the very end of the show and we'll cover all of that and a whole lot more. And I wanted to start off over here with Bitcoin on the weekly time frame. If you look over here, Bitcoin on the weekly chart, the previous week we outlined some key levels that we wanted to focus on. First and foremost, let's have a look over here at the 21 exponential moving average, which is the yellow line over here. You remember, if you zoom back and you look at this historically, as long as price is situated above this moving average or this exponential moving average and it's angled upwards, that has generally been a pretty good thing, and it would mean that trend continuation onwards and upwards. But now, if we look at the finer details, look at the gray highlighted candles over here, which is the major expansive candle that started off this rally that we had all the way back in January, and we measure the midpoint of that candle from top to bottom, the 50% level, it comes in over here. Okay. This wick did not quite make it there. It got very close to the 50% level. Then you measure off the next major one over here, big expansive candle, the 50% level. That wick came directly into the 50% level. And then we had the next major expansive candle, which took place on the 19th of June. Now, if we measure the 50% level of that candle, that's coming in around that $28,870 level. So give or take, 28,500 to about 29,500 is your area of interest if you are looking for a buy the dip opportunity. We'll show you on the low time frames how this lines up with what we're seeing on the high time frame over here, but keep an eye out on that. If this pullback continues, you'll probably find a bit of support at that 28.8 level. So moving on over here, if we look at the implied volatility for both Bitcoin and ETH options, they're the lowest that they've been in over 3 years. So on the other hand, if we have a lot of big catalysts in the coming months, he says over here, and the year ahead, both positive and negative, do with that information what you will. Ultimately indicative that you can expect major moves. Now, if the Bitcoin market cycles persist, the halving cycle plays a major role within how crypto operates, then you would expect that maybe that could be a catalyst towards the upside. And if you look over here at CryptoCon, he also covers the volatility. He says, here's the facts: when Bitcoin volatility gets low, when in a bear market, then it's very, very bearish. But when volatility gets low and it's a bull market, it's insanely bullish. The weekly Bollinger BW proves it. Entering a low volatility zone brings big moves. And then he says over here that Bitcoin is in a bull market. So if we look at that bottom indicator over here, the low volatility zone, that's your volatility indicator. I've shown you this chart before as well, which I'll bring up in a moment. But ultimately, contracting into that zone is ultimately where you see the biggest moves if it's a bull market. It works the same way with the VIX, the volatility indicator for the S&P 500. A lot of investors believe that when the VIX contracts into that low volatility zone, it's a dangerous situation, and it means that if it comes out of that zone, that the stock market's going to absolutely nuke. Now, I've said to you before, you need to take this into context and consider where price is in relation to the market cycle. If the S&P 500 is in a bear market and it's coming into a major resistance zone while the volatility is contracting into these low regions, when that volatility indicator starts to lift off out of that zone, then ultimately that would mean that the stock market would probably continue to come down. But if the stock market is not in a bear market, but in fact, in the start of a bull market, when that volatility indicator contracts into that lower green region, that's where you see the biggest rallies. And the same thing is true for Bitcoin. So you can see it over there, ultimately contracts into this zone, slowly starts to come out, and then you start to get your major move. So that's Bitcoin's volatility over there. Now, the trade that I just mentioned is ultimately on Binance US. So if you look over here from box mining, Binance US Bitcoin is trading at $26,000 versus $30,000, which is the current Bitcoin price. And that's quite a big discount and a premium if you're going to sell it onto another exchange. So it creates a major arbitrage opportunity. And my team and I have tested this yesterday. If you had money that's on Binance US and you already have the account funded, it is an opportunity which you can take advantage of right now, where you can essentially sell or buy that Bitcoin at 26,900 and immediately transfer that off of the exchange and convert it into, you can either swap it for another coin, ETH. Either way, you're going to lock in the reward, or you can directly sell it onto another exchange. So why is this happening? That's the big question. And is this a dangerous situation? Well, it is a slightly dangerous situation. I don't want to go and speculate that there's nefarious activity going on with Binance since their whole SEC judgment, which is currently taking place. Ultimately, the reason why this is taking place is because of two liquidity providers, which is Jump Capital and Jane Capital. Those are major liquidity providers in the US, and ultimately they're now moving out of the US because of the SEC law cases against Binance. As the liquidity gets pulled from the market, of course, that creates major slippage, which leads to these price depreciations or differentials, which you're seeing on Binance US versus the other exchanges. Now, it's only going to be an opportunity if you already have a Binance US account, and especially so if you already have crypto on there. If you have other coins on there, you could technically convert those or sell out of those coins, buy into this Bitcoin, and then you can change that or send that off of that exchange into another exchange and then make your sale at the premium price. Okay, and there's the liquidity. So it's all a game of liquidity. Liquidity super low. Here's the People's Bank of China chart on the bottom, a representation of where the liquidity is. Absolutely completely wiped. The histogram has gone pretty much back to zero. You have the net USD liquidity, which has kind of also been oscillating at those low regions that we've seen for most of the year. And then you have the major central bank assets over here. Not much to write home about either. Pretty much oscillating also at low levels that we pretty much been experiencing for quite some time. And then the most important one is the USD stablecoin supply, still continuing to trend down, although it does look like it's slowly flattening out over here, but it's going to take time before it establishes a strong base and then starts to tick on up. So what does this all mean for your trades? Well, we like to sell resistance and buy support. So if you take your support levels over here, which is this area that we're looking at, between that 28.5 and 29.5 as a potential buy the dip zone, then that's what we're doing, right? That's what we've been doing on the show. We still have our grid set up over here between 28,000 and 30,355. This is a $50,000 position, which is currently being bought into. It takes time and requires patience. It's a grid trading strategy on OKX. I have mentioned it on previous shows. If you do want to participate in this, there is a sign-up bonus to OKX in the description below. You get up to $30,000 in sign-up rewards. Just click on that link over there and it will show you all the boxes that you need to tick to qualify for that. And then you can go through to trade and then click on spot trading, change it from the normal trading option into bot trading, and then you can copy these settings, which just screenshot this. It is all over there for you. Okay. Key events this week. What are the key events? There's a lot going on this week, which suggests that volatility should be picking up within the market. If you look over here, the key events, number one, CPI inflation data is going to be coming out on Wednesday. Number two, PPI inflation data will be on Thursday. 3, jobless claims also on Thursday. 4, consumer sentiment data on Friday. Number 5, Q2 2023 bank earnings will begin. They're usually the first that round up the earnings reports is going to be the banks. And then after that, you have total of 8 Fed speakers also going to be talking this week. And then volatility is set to return. I do agree with that. There will be some sort of volatility. And you may already be seeing the market trying to de-risk going into those events. This is reminiscent of what we often see, right? We often see Monday, Tuesday, Wednesday, a little bit of a sideways to slightly down day within the market. And then when you come into these key events later on Wednesday and into Thursday, that's where you often see the market start to pick up. So mark it off on your Forex Factory calendar over here. Just type that in if you want to see the exact times according to your time zone when these events will be taking place. And TED Talks shows over here, When you do look at the US CPI for June, which is due on Wednesday, it's expected to fall to 3.2% year on year, which would make for the lowest print since what we've had in March 2021, ultimately suggesting that it is coming down. The Cleveland Fed, University of Michigan, and Truflation all anticipating a similar number. Now, for those of you who aren't familiar, Truflation is often one of the best indicators of what actually is going on with inflation. So they're also looking at a reduction in that. Core CPI is expected to tick lower to 5.1% year on year, the lowest level since November 2021. Core remains the major concern still for the market. And he says he'd anticipate that the market gives it more weight in its reaction on Wednesday. So depending on what happens with that, obviously, if the result comes in lower than expected, well, that's going to be even better for the market. If it comes in as expected, which currently we're predicting lower, a tick down in inflation, then again, expect the market to react and maybe push up slightly off of that. So James Bull showing over here as well. A massive CPI drop expected. The biggest one so far from 4% to 3.1%, and we are now only 0.2% away from the target inflation of 2%. So that's a great thing, right? But once they get to 2%, that's the important thing that you need to understand. Once the Fed does get the inflation rate down to the ultimate target goal of 2%, they probably continue to raise and reduce it below that 2% region, because inflation has a way of often bouncing back. So when it hits 2%, that doesn't mean that they automatically just stop. They're usually going to want to push it even further below there, expectant that it will eventually tick back up. And that tick back up, they're hoping will be stuck at 2% and not get back above that. So keep that in the back of your mind when considering your fundamentals and trading. Okay, if you look here at Crypto Crib, he shows as well Coinbase founder Brian Armstrong actually sold 5.8 million coin shares this week. What's significant about that is his largest ever sale. I don't want to read too much into this yet. Let's just see how the story unfolds and what happens with the other earnings that come out from the bank. It might be an indication. Maybe there are going to be some bad earnings reports if he's already selling. And if you look over here at the FedWatch tool, again, 92.4% probability that it will be a 25 basis point rate hike. So more than likely that's going to be the result. The S&P 500 currently pulling back. What is the target level? Same as what we mentioned from the prior week. We're looking for a pullback into the top side of the range over here at about that 43.25 zone. So if you zoom out, remember, this was the major range that the S&P 500 was holding. We had a breakout from that range, looking for pullback into that zone, and then most likely another bounce and an attempt at the major resistance, which is your gray box territory over here. Once you start to get above that, then most of the bears will begin to capitulate, because that is really their final line in the sand, and their final hope is that this area, is that going to work? There we go. Is that this area is going to fail, right? So if we get and hold above that area, ultimately they have to capitulate, and then you can say that the S&P 500 later on in the year, this could be 6 months away, will start to climb towards all-time highs. All right, guys, I did just receive a very important message. Very, very important. Please smash the like button. Josh gets paid based off the likes, and he hasn't been paid for a while because he actually hasn't been doing my shows for a good part of a week. So he's going hungry, and he would really appreciate it if you smash the like button. Also, subscribe to the channel and hit the bell notification if you are not already subscribed. And then if you do want to trade the S&P 500, remember, Prime XBT do offer crypto commodities as well as stocks. And all you need to do is click on the link in the description below. However, once you get through to, there we go. Once you get through to for the sign up deposit, do not type in Kyledoops. Rather send me a DM on Twitter if you do sign up and make a deposit, because instead of giving you the 7% bonus, I still have a couple of 20% bonuses available. I'm not sure how much longer they're going to do that deal for. So that's for you over there. Make sure you click that link below and then send me a DM. Okay, let's go into the pivot levels. Now, this is what's going on more in the for this week's trading ranges. If you look over here at Bitcoin, it has lost the pivot level, right? So it is starting to look like it's distributing. However, it's not over yet. If it continues to remain at these zones, then ultimately this will begin to distribute towards the downside, and bulls need to reclaim the high level soon. So the sooner that bulls can reclaim this pivot level and hold price above, the better. Otherwise, you risk distribution. Currently, we do have the 18 EMA, which is the pink one over here, which will act as a support level. That's coming in at 29,700. Your pivot level right now is at 30,609, meaning that we're currently holding below that, and risk remains to the downside. If for some reason we start to lose that 18 exponential moving average, then you can expect further distribution, and that could potentially take you all the way back down towards the 200 EMA. And if that gets lost, well, ultimately the 200 EMA, and that's you're looking at around your $26,500 region. Okay, let's go on to ETH over here as well. Look at ETH's pivot levels. ETH is currently situated at 1,854 with the pivot level at $1,884. So below both the moving averages, both the 9 and the 18, which is the yellow and the pink, you can see holding below that level. Failure to get back above here. If it continues to hold here, same thing. Expect the possibility that it could revert all the way back to the 200, which is coming in at 1760, right? That 1760 region is your 200 EMA, and then the 200 MA is trending up. This would be a very, very solid buy the dip opportunity, right? Each time that you come into those, you don't get that many tests in a bull market. If it is in fact the start of a bull market, you expect that you get a few tests into that, and then price will continue to rally. So you can see here was the first one that we had. This would then be the second one for Ethereum. Okay, let's go into Bitcoin over here on the 4-hour chart. Also currently below the 50 EMA, right, which is the red one, and the 21. The 21 is coming down as the yellow one. We said if that does happen again, watch your 200 EMA as a potential bounce zone. Right now, that's at 29,200. That's your shorter term, right? And then that will bleed into the high time frames. If you fail to bounce from that 200 on Bitcoin and you start to lose that on the 4-hour, well, then you start to look at those low levels that I just showed you on the daily time frame. ETH, okay, ETH not looking as good, and that's in alignment with what we've seen on the ETH BTC chart as well. You can see ETH is starting to lose very important levels on the 4-hour chart, which is going to be your blue 200 EMA. The longer we continue to hold below here, the more these moving averages or EMAs continue to trend down, and this starts to create a major cluster of resistance at that 1860 region. So hold under that 1860 region, it's going to start to reject and act as resistance, and then again ultimately you expect continuation down towards those lower support levels, which I just showed you on the daily time frame. But on the low time frames, 1-hour time frame, this is what you're looking at. And this lines up with everything liquidity based, right? So if you look and you compare to all your liquidity zones over here, it is ultimately this range. This is your liquidity zone. So let's just quickly clear that up, make this a bit bigger for you. Okay, I have posted this as well in both the daily candle newsletter as well as in the Discord. If you do want access to the Discord, there is also a link in the description below. Ultimately, you have your range high, your range low. Range low is coming in at 29,534. Range high is at 31,277. This range will most likely continue to hold. If you break and hold below the range, well, that's where you start to see those high time frame breakdowns. But ultimately, in the very short term, meaning over the course of today, tomorrow, and probably all the way towards Thursday, any sweep of this range low that I see and a reclaim is immediately a long opportunity. That's your long, right? Once you have your wick like that, that's established underneath. That is where your risk lies, right? So you put your stop loss underneath there. Stop goes under the wick, reclaim, enter in over here, and you're longing towards the mid-range, number one, and then you can long back towards the range high, and possibility of even breaking above that range high once you come back there for how manyth time? 1, 2, 3, 4, that will be your 5th time. On the 5th time, it's probably increasing the odds that it's going to break, because ultimately, remember, this is still your flag portion of the bull flag on a high time frame. This is still a bull flag. So unless you break and you hold under here, if you do break and hold under the range low, well, then it starts to look like that Bart-Simpson pattern, right? Where you have major distribution. So there's Bart, there's his head, and then you have your distribution back towards the downside. So ultimately, what am I saying over here? Because I don't want to confuse you. I think in the short term, it's definitely advantage to the bulls upon a sweep of this 29,534. If they sweep and reclaim, that advantage that the bulls have on the 1 hour time frame will start to trend into the 4 hour time frame, because 4 hour will then reclaim the 50 EMA, which then on the higher time frame, being the daily, will get back above those important pivot levels, and then all the risk goes back towards the upside. But hold underneath 29,500, and we have to start to rethink things, because that means that risk on the daily, the 4 hour and the 1 hour become or turn back towards the downside, and then you could be sparking trouble, right? So if you look over here at high block capital on Bitcoin, looking at the Binance chart for Bitcoin, you can see again the cumulative liquidation delta is very negative. It's towards the bear side, meaning that a lot of shorts are within the market over here. And again, tying in with this, if you see a sweep below here and a reclaim, ultimately what's going to happen? These guys are going to get squeezed out of their position, and price is going to rocket back towards the upside. Where's the upside? Well, it's the range, right? 30,300 is your first area. 31,300 is your next area of interest. Okay, if you look over here at the trading light chart, again, this is also the liquidity levels. I'm on a 15-minute time frame. You can see on the bottom side, 29,000 over here. 29,000 is going to be $29,600 is going to be your lower end. How does that line up over here? Well, if you look at that, isn't that interesting, right? A lot of liquidity is stacked here. You can see it, right? The yellow line, a lot of liquidity is stacked over here. Those are thick orders by Bitcoin bulls. And then your upside is going to be 30,500. Let's line it up with our chart over here. And again, would you look at that? That's your mid-range. So you can see buy area, sell area. Pretty simple. Keep trading the range over there. And that is unanimous across the board. High block capital's liquidation levels are showing exactly the same thing. Okay, what about ETH BTC? ETH BTC over here still continue to hold below that 0.25 level. So maybe that is already this bounce that I was looking for. That's as high as it got. So I'm feeling pretty happy that I basically moved out of ETH and back into Bitcoin, because I'm looking for a move back towards the bottom of the range, 0.0557. That's where I'll reevaluate and consider selling my Bitcoin back into ETH again, looking for a bounce over here. Okay, so that's that. Total. What about total? We're still watching this level very carefully in the possibility that it's a Wyckoff accumulation schematic that leads to a sweep towards these lows. That would be 231 billion, big bounce area over here. If not, and it's a Wyckoff accumulation schematic, which is this one over here, if it's schematic 2, then you would expect that this would continue and start to push up. And then your SOS phase is where the market really starts to get rallying. That is this zone over here. Okay, until then, we're not sure, right? We need to wait. The only way we can confirm which Wyckoff schematic we're in is either if we bounce from this zone or we reclaim this zone. This area in between, there's nothing we can do, which is why I'm not really trading altcoins, right? This area is no man's land for me. I don't know what's going to happen. So unsure on that thought, and you can see the range, right? Basically, you got your downward channel and you have your horizontal channel, and price is capped over there. Okay, cool. Let me know in the comments, what do you think? Do you think we're in schematic 1 or schematic 2? This is schematic 1, means we're coming down here. This is schematic 2, means that we're probably going to continue up here. Let's just confirm that. There we go. Yes, schematic 2 is the one that comes up here. Schematic 1. Tell me in the comments, where are we? Schematic 1 or 2? And then let's continue on over here. Benjamin Cowan over here, he says, in July 2019, altcoins were at the same valuation against BTC that they are today. While timeframes do not have to align perfectly, this chart still suggests that altcoins could collectively drop by another 40% against Bitcoin. It's called the altcoin reckoning for a reason. So pretty scary chart. Ultimately, what he's looking at over here, total 3 minus USDT divided by Bitcoin. So it's basically the altcoin market against Bitcoin market. And he's shown here that it oscillates between a major range, right? So you have the top side of the range and you have the bottom side of the range. And again, if you're a trader, you want to do your business at those extremities. Currently, you are at the mid-range. Mid-range could provide for a bounce opportunity, but the extremity is going to be 40% down, as he's shown, meaning that for the most part, altcoins definitely could take a bit more of a beating. All right, let's have a look over here. One more thing that I wanted to outline to you guys. This is just a quick community tip over here to save your bacon. New scam. People are trying to copy trade the same tokens from profitable wallets. What these famous wallets do is that they indeed inject liquidity into the token pool, but they pause the trade and then later they remove all the liquidity, thus meaning you're trapped. So why am I mentioning this? Well, a lot of you guys out there I know track these whale wallets, right? These so-called whale wallets. I'm sure you've seen it go viral on Twitter where it's like, this guy took whatever, $2,000 and turned it into $14 million in 3.5 weeks. How did he do it? Those are, you know, the clickbait ones that they show. And then ultimately you dive into there and you're like, oh, he tracked this wallet and that wallet and that wallet. And these are whales. And you just literally just copy pasted whatever those whales did. Well, be careful because it is often a scam. This is what they're doing. If it sounds too good to be true, you know the saying, it is too good to be true. They basically providing liquidity and at the last minute they're pulling the orders and ultimately you get trapped and basically you've given them your coins, right? You can't exit those positions because there is no liquidity and later on they can basically take the money off of you. So that's it, guys. Brings us towards the end. Smash the like button, hit the bell notification, and then make sure that you are subscribed to the channel. I think we've covered everything that we need. Look, I'm just going to wait it out this week before we start to get into major altcoin calls or anything like that. Let's see what happens with all the economic data that comes out. I will see you all on the next one, which will be tomorrow. Have an absolutely stellar day. I appreciate each and every single one of you. And that's it from me. Cheers for now.